Hello everyone, and welcome to another episode of the Daily Gwei Refuel, where I recap the latest news in the Ethereum ecosystem. I'm your host, Anthony Sassano, and today's the 12th of November 2021. Alright everyone, let's get into it. So, I'm trying something new on Twitter. So, if you guys haven't seen yet, there's this Twitter Blue feature that came out recently, and it basically has a bunch of like premium Twitter features. You can subscribe to it for however many dollars a month it was. I remember I subscribed to it a while ago, but one of the features that they introduced was that you can now do videos of up to 10 minutes in length. So I'm like, oh, this is perfect. Like before, I think the video length limit was like 2 minutes and 20 seconds or something, and that was just way too short. But today I was like, wow, okay, let's try an experiment. So I basically was just thinking today about kind of like attention and kind of like narratives and marketing and attention games within crypto, and how the TLDW, I guess, Too Long Didn't Watch, of this video here that you can see on my screen is basically me just talking about how if you don't have attention in crypto, if your project doesn't have attention, then it's going to just fade into irrelevancy. So, I mean, I'm not going to go over it now because obviously you can just watch this video, but I'm going to be doing more of these, hopefully, just like randomly whenever I think of a topic that I want to talk about, that'll probably take me 10 minutes or less to talk about, I'll record it and put it on Twitter. So I assume most of you already follow me on Twitter anyway, but if you didn't see this, definitely go check it out. It'll be linked in the YouTube description below. So Argent put out an interesting tweet today where they said Ethereum today has private key management solved with using kind of like the Argent wallet or a bunch of other kind of wallets out there. Gas fees, they've been solved and it's rolling out now. And I mean, it's funny because people still think, even though we have these layer 2 solutions out, that gas fees haven't been like solved, that we don't know how to kind of scale Ethereum when we do. And I've gone on about this a lot of times, so I won't repeat myself. And then Argent says use cases, there's too many to count. Ethereum is home to thousands, if not tens of thousands of things that you can do on there. There's things popping up every day. There's things kind of like fading into irrelevancy every day. But in terms of, I guess, like core apps and core use cases that we have on Ethereum, there's plenty. In terms of use cases that kind of like sit at the top of everything, we have DeFi, we have NFTs, we have DAO, social tokens, layer 2 stuff that you can kind of like do. There's there's so many things, right? And then within those categories, there's just an explosion of stuff happening. So yeah, way too many use cases to count. And they say energy usage soon dropping by 99.95%. Now, this is what I wanted to focus on, this energy usage thing here, because I put out a tweet last night where I said, I really can't wait until the merge happens, because we can go from basically saying proof of stake is coming soon to proof of stake is here. No more kind of like promising it and people saying, oh, well, Ethereum's been moving to proof of stake for years now. People are actually going to be able to see that Ethereum is now proof of stake. We no longer use proof of work, and that's done. We never have to have that debate again, which I think is very important because I've gone through it on the refuel before, but basically the world right now, and most of the governments around the world right now, one of the top things they're focused on is climate change, right? So anything that's using lots of energy is going to become a target. Now, whether you think proof of work mining is good or bad for the environment is a whole nother discussion. It's just the narrative that proof of work is bad is a persistent narrative and is a pervasive narrative, and it's everywhere. Like, I mean, I'm sure you've seen kind of when people talk about NFTs, negatively, they say NFTs are killing the environment. Obviously, that argument in itself is wrong for a number of reasons, but I mean, those kind of tweets and that kind of talking point is extremely popular. So there's going to be governments around the world that, I mean, we've already seen it with kind of like China cracking down on mining. There's going to be other governments, whether kind of like they're kind of like Western governments or Eastern governments or wherever around the world, they're all going to be looking at this and kind of like deciding what to do with it. And I'm just really happy that Ethereum is not going to have to fight this battle once it moves to proof of stake, because if Ethereum has to fight this battle alongside Bitcoin, it could get really ugly. I'm happy for Bitcoin to take it because Bitcoiners want proof of work. They're happy with it. They see no issues with it. And that's totally fine. Like I'm happy for them to be like that. But the Ethereum community, since basically day zero, has wanted proof of stake. So, once we move to that, we'll be happy. And then we won't have to kind of like deal with those kind of negative consequences of still being on proof of work if they ever come. Like, they may not ever come. Governments around the world may take a more pragmatic approach and basically say, well, yes, proof of work uses a lot of energy, but maybe it's actually renewable energy. I mean, I don't know. I kind of like give that a low chance of happening. I think that the narrative is more powerful than the reality, but we're going to have to wait and see. But I'm just really, really glad that Ethereum isn't going to have to deal with that very soon. And it's not just like the environmental stuff with proof of stake. staking, a proof of stake to me, Ethereum's version of proof of stake is much better than proof of work, I believe, for a number of different reasons. I think one of the reasons that doesn't get talked about enough is the fact that it just works to much better align incentives between the Ethereum network and the people running the Ethereum network and the holders of ETH, right? And the people using the network. Because unfortunately, just kind of like the way it worked, a lot of miners that I know of, they treat it as like a business, right? Because it has to be. They don't really necessarily use Ethereum, and Ethereum to them doesn't really mean much. It's just something for them to mine. They get their profits, they sell their ETH, and they go on their merry way. Whereas with proof of stake, you have a much more kind of like tightly coupled thing here between users and people who run the network. Because I mean, I'm a staker, I never mind, but I stake. There's a lot of people like me that are staking their ETH. Now with Rocket Pool coming online, there's going to be a lot of people that will be able to stake with less than 32 ETH. And people who stake through centralized exchanges are probably more likely to use Ethereum and use these apps. So it's just a much better kind of alignment of incentives here, and a much tighter coupling between users and people running the network. But that's less talked about. But the other thing that's less talked about as well, I think, is this concept of economic finality, which, I mean, it's talked about when you talk about the security that proof of stake offers. But what economic finality does is that every 12 minutes, 2/3 of the network, which is tens of billions of dollars worth of ETH, so 2/3 of the ETH staked, basically says everything that happened, from kind of this 12 minutes or before is finalized, and it cannot be reverted. If someone wants to go back and revert it, or if the network wants to go back and revert it, it's going to basically get that 2/3 of ETH slashed, which is a lot of ETH, right? It's tens of billions of dollars of ETH that's at risk. And what this allows for is much better settlement guarantees, because you can basically have a super strong guarantee that it's near impossible for whatever's been settled in that period of time to be reverted. Now, you don't have that with proof of work on Ethereum. You can actually technically go back to Genesis and rewrite the whole chain if you want to, if you had the hash power to do so. Now, this would obviously cost a lot of money to do, because you would have to get 51% of the hash power, and you'd have to keep yourself at 51%, and then you have to go and mine through all the previous blocks again, and then kind of like replace the existing Ethereum chain with your kind of like new chain and rewrite history. It would take a lot of work, but you could do this up to a certain extent. You don't have to go back all the way back to Genesis, but you can reorg, and this whole discussion is about reorgs. You can reorg pretty deep if you had the majority kind of like hash power, whereas with proof of stake, you would need 2/3 of the stake to do this, and it would also be like a major risk, and there's kind of like social consensus that comes into it that can fork you away and stuff like that. So yeah, I mean, proof of stake is amazing for many, many reasons. I think that those two are a big deal. I definitely think the energy usage thing is a big deal, because we can finally say to these people that are hating on NFTs, and just say to them, well, Ethereum doesn't use proof of work anymore. We use proof of stake, and it drops energy usage by 99.95%. And whether they actually want to listen to that or understand it is another thing, because I've already seen a bunch of them pivot to the fact that they think NFTs are just straight up scams. So really, I mean, these talking points aren't, I guess, like based in kind of like any sort of reality or logical thought. But I'm glad that we can probably, like I've said before, that I don't think we can win a narrative war just based on kind of like narratives alone. The way to win a narrative war is just to build and like keep building. And that's exactly what happened with Ethereum over the years. I mean, up until DeFi Summer, a lot of people didn't like Ethereum and thought it was just useless. Then DeFi Summer came along, and I saw so many people that were already in crypto but became Ethereum converts because of that, and became DeFi converts because of that. So I think the same thing will happen here when we move to proof of stake. There will be a lot of people on the fence about kind of like crypto, or just straight up hating crypto because of the proof of work energy usage, that will kind of come around and say, okay, well, you actually moved to proof of stake on Ethereum. Now we can use it. Now we can do it because it fits in with our beliefs. So that's another thing I'm just like super, super excited about. So another tweet from Polynya today. It's got to do with something that I spoke about yesterday or the day before, around token kind of like incentives or liquidity mining programs on rollups on layer 2. Now Polynya says, token incentive idea for rollups, paid out to developers based on gas usage of their smart contracts. Competitive pressure could lead to developers sharing this with users, in addition to direct usage incentives for users. Liquidity mining is ephemeral. We must do better. This is an interesting idea, because This is a really easy way to, I guess, pay out token rewards to developers by using something that is hard to game. Like gas usage of smart contracts is hard to game because it's going to cost you in fees. Even at these rollups, the fees are going to be cheaper, but they're not going to be cheap enough for someone to kind of like spam the contracts with transactions to try and get these tokens. So you could imagine these developers launching their apps on these chains, on these rollups, and basically having people use them and then getting a pro rata share of a token incentive for that. Now, they could, as Polynya says here, they could choose to share this with their users or not. And to be honest, competitive pressure would probably require them to share it with users, because you could imagine something like Uniswap and SushiSwap being on Arbitrum, and then seeing kind of like SushiSwap give the token rewards to users and Uniswap doesn't. Well, then Uniswap would probably be forced to do that, or else everyone would be like, why am I using Uniswap when I can go use SushiSwap? So it becomes this kind of like game here where it's different to traditional kind of like token incentive programs, but it is different in the sense that it gives the choice to the developers and kind of like the contracts, and it kind of pays out based on usage of the contracts rather than based on kind of like liquidity locust and mercenary yield farmers and stuff like that. So I thought that was just an interesting tweet from Polynya that kind of like latches on to what I was talking about in either yesterday's or the day before's Refuel, and in my newsletter where I spoke about incentive programs for these rollups and how I believe that they're coming because they have to, but we can innovate here. We don't have to just do the same thing we've done on layer 1. But we could do the same thing, and I think it would still be okay, but I would like to see more innovation from rollups on the token incentive side of things. So Mihailo from Polygon here has put out a tweet that said, from 30 apps to 3,000 apps in 1 year on the Polygon POS chain, and he's so proud and thankful of this. This is actually quite an amazing level of growth. The funny thing about Polygon is that at the start of the year and like last year and like for years previous, they were known as Matic Network, and their token still trades as Matic and people still know them as Matic. Now, they were building a Plasma solution for quite a while, and that didn't really take off because Plasma kind of became obsoleted by rollups. Then they kind of built this POS chain because they were basically like, well, Ethereum layer 1 is getting super expensive. Let's get an EVM kind of like compatible chain going that bridges in and out of Ethereum, gives people something to use with cheaper fees. Yes, of course, it's not as decentralized and as secure as Ethereum or a kind of like quote unquote true L2, but it's a really nice solution. And I talked about that yesterday. But essentially, what I find amazing is just how quickly these things grow. I mean, I'm sure a lot of you have seen, if you follow the Polygon account, the amount of tweets they put out about apps building on them. And they don't just have like garbage apps. It's lots of good apps as well. They have basically, an Ethereum a DeFi ecosystem that could be on par at this point with Ethereum. I think the only app that they're missing on there, in terms of like the premier app that's on other kind of like chains, is Uniswap. Obviously, they're missing Compound as well, but I don't believe Compound is on anything except Ethereum right now. Same with Maker, and I don't believe that they will be on anything except Ethereum. Compound has their own thing called Comp Chain, which I haven't heard about in a while, and I've always thought that didn't really make sense for them to do it. Maybe they've still got, they're still building it out and it'll still happen, but most of the other kind of like top DeFi apps have already deployed to Polygon, and Polygon also has their own apps that aren't on Ethereum, such as something like QuickSwap. They have QI DAO, which is like a Maker clone from what I understand, and a bunch of other things on there as well. So really, really awesome to see that. And it's been, 11 months at this point almost of this kind of like stuff happening in this year. And I'm looking forward to more growth here. But I'm also looking forward to more growth of their layer 2 solutions when they roll them out, because if we take a look at Arbitrum, we can see that Arbitrum's been live since August, end of August. I believe it's like right at the end of August. So we could say that September, October, November, 2.5 months there, about 10 weeks. Now there are over 200 DeFi projects live on Arbitrum One, and more are coming as they realize that L2 is the future. And in this tweet, Arbitrum basically said, hey, people should tag their favorite kind of like DeFi projects to come and migrate across. And again, I think the only major thing that Arbitrum is missing right now is a money market. So Aave V3, I think it passed today, so it's going to be going live soon. I think they're going to deploy Aave V3 to Arbitrum and Optimism rather than deploying Aave V2, which makes a lot of sense because Aave V3 has that portal feature in it, which is built for cross-chain, cross-L2 communication. So obviously that makes sense for them to do that. But still amazing to see in just like 10 weeks, which 2.5 months, there's over 200 DeFi apps, just DeFi. I mean, there's other apps as well. There's NFT stuff happening on there. There's a bunch of other things as well happening on the Arbitrum network. So great to see growth of not just Polygon, but Arbitrum as well. zkSync is on the, I guess, like partnership announcement spree lately. They've had an announcement pretty much every day at this point, a major announcement as well. And today they announced that they are integrating Chainlink into zkSync 2.0. And I mean, you guys will remember when I spoke about how Arbitrum and Optimism need this kind of critical infrastructure before they can actually launch, or before they can actually have a bustling DeFi ecosystem. It's going to be the same for every one of these things: zkSync, Starknet, Polygon Hermes, any of the zk VMs that go live, like any of this stuff, it needs this critical infrastructure, such as a block explorer that is familiar, like an Etherscan like block explorer, something like an Infura or an Alchemy. Then you also need something like a Chainlink, right, as infrastructure. So zkSync is doing that, and they're also doing kind of like the on ramps as well that I've discussed in the past few days. So yeah, I mean, you're going to expect to see this from every one of these solutions, but it's great to see that. I mean, zkSync, it pretty much had this in their pockets already. I think they were waiting until they announced their fundraise, and now they're announcing all their other partnerships as time goes on. And zkSync 2.0 is due on testnet, I believe, Q1 of next year, and then mainnet should follow shortly after that. So I've said it before and I'll say it again. I think 2021 was like the year of L2 in terms of like getting the first iterations out there. But I think 2022 will be the year of L2 adoption, where we actually get like lots of users on these things. We have token incentives to bootstrap growth. We have all the apps that we would like on there. We have centralized exchange bridges in. We have like all the necessary infrastructure. I think that's going to happen in 2022. And it's really going to be a battle between L2s and these alternative L1s. And you guys know that I'm betting on L2s like hand over fist. There's just no way in my mind that most of these L1s, especially the EVM sidechains, are going to even hold a candle to this. And it doesn't even have to do with transaction fees. It's also got to do with what developers want to deploy to and the speed of transactions. Like, I'm sure you've all noticed by now that on these kind of like layer 2s, the speed of transactions is pretty much instant, which, I mean, you know, once, even if it takes 1 second, and no one's going to care, they have to wait 1 second. So, and that's going to keep getting faster over time, obviously, with the OVM 2.0 upgrade, which I'll talk about in a sec, Arbitrum Nitro, you know, all the kind of like stuff happening on zk rollups. It's just going to keep getting faster and faster and cheaper over time. So very, very encouraging for 2022 for layer 2s. And the OVM 2.0 upgrade is finally live on the Optimistic Ethereum network. So this means that Optimistic Ethereum is now EVM equivalent, not just EVM compatible. Transaction fees should have come down with this update. I tried doing some test swaps on Uniswap, but I don't think the transaction fee estimation from MetaMask is actually working yet. I think they have to kind of fix that for the new upgrade. So I'm not sure how far the transaction fees have come down from what they were previously. So we'll have to kind of like wait and see with that. I did mention that I thought that Optimism would remove their whitelist shortly after the OVM 2.0 upgrade. They haven't announced that they're removing the whitelist yet, but they have said that if developers want to deploy to Optimistic Ethereum, they can go through this onboarding form and they'll be able to be onboarded within, I think, a week. Can deploy within a week. So I think they're just trying to play like really safe because it's still early stages with OVM 2.0. But I really do think Optimism needs to remove this whitelist like ASAP, because if they want to keep growing, and they want to keep, pace with Arbitrum, which is basically their competition in the optimistic rollup space, they need to do that. And I'm sure they will, but they're just playing it safe right now, which is totally fine, because they've just done a major upgrade. They want to make sure that everything's going well with it. They want to make sure that nothing bad happens, and that's fine. And if they can actually live up to their promise of onboarding anyone who signs up through this form within a week, then maybe it's not that big of a deal. But we'll see how that plays out. We'll see when they remove that whitelist, hopefully sooner rather than later. So Blocknative had another tweet thread today about, Ethereum gas fees during major NFT launches and how EIP 1559 with the base fee and the priority fee react around this. Now, the reason I want to highlight this thread is because I want you to go read it, because something that I've been trying to tell everyone for quite a while now is that EIP 1559 did not raise gas prices. What raised gas prices was network demand going up, and network demand went up a lot because of NFT mania, and network demand is still up right now because of the fact that the market's hot again, right? We're at like near all-time highs or around all-time highs. There's a lot more activity happening. There's a lot of stuff happening on the network in general. I think that as time goes on, the gas fees just trend up because of the fact that there's so much profit opportunity on Ethereum for, arbitrage bots, for MEV, for whales, for people who want to do stuff on the network. I mean, you saw what happened when the ENS token dropped. the fact that it was like worth so much, the airdrop, people were happy to pay like a $300 transaction fee to claim the ENS airdrop if it was worth like 20 grand or 30 grand. So when you look at it like from that perspective, you can actually see why. Basically, the way I look at gas fees always is, okay, what's the profit opportunity here? If it makes sense for someone to spend hundreds of dollars on gas fees, if they're going to get massive profits out of it, then what, that's just logical for them to do that. But not just, individuals, bots, MEV bots, arbitrage bots, they're always going to be willing to pay maybe 95% of the transaction a profit as a fee to extract that 5 to 10% profit. And I've mentioned that before, but I think that's what people don't realize is that this is kind of like when you sell a product, for example. So say you sell a product and it costs you 90% to buy this product. You're a retail store, your cost on this product is 90% of the transaction of the purchase price, and 10% of it is your profit. Now, are you going to not spend that 90% just because you're only making 10% profit? No, of course not. Any profit is good profit. I mean, it's profit at the end of the day. Like, it's money in your pocket that you didn't have before. It's the same thing for Ethereum block space. These people extracting profit from the blocks from doing these transactions, whether they be, as I said, arbitrage, MEV, they're going to happily pay 95%, maybe even more than that, of the total transaction profit as a fee, because that's just the cost of doing business at the end of the day. So when you think about it like that, when you think about block space as a product that Ethereum sells, and kind of like it's kind of like flipped on its head, where instead of Ethereum paying the 95% as a fee, the user pays it because that's their cost for buying the block space, and then their profit the profit that they extract is the remainder, the 5 to 10% or whatever it is as a remainder, and that can still be very, very, very lucrative. Because, if you're making, if your transaction fee is $90 and you're going to have a $10 profit, and you do that lots of times during the day, because that's what these arbitrage bots do. Imagine you do that hundreds of times a day, you're making thousands of dollars just off pure arbitrage and pure bots. Like, these are just things that run on their own. So you're more than happy to pay the fees because you're extracting the profits from it. So when you take that view of things, you can kind of like get a sense for why the fees on layer 1 are high, and why block space demand is basically infinite. The stronger and the bigger the Ethereum economy gets, the more demand for its block space. So don't expect the fees to come down on L1, as I said many times, and even L2s. As L2s grow, we're going to have to keep scaling. So that's why we've got like scaling at the vertically with layer 2s and horizontally with sharding and statelessness, because we need both. You can't just have one or the other. You need both. And this is why I'm really bearish on these monolithic chains that say we're going to scale everything at L1. We don't need any kind of like sharding. We don't need any L2. And even if they did sharding at L1, they would still need L2. So that's why Ethereum, I think, as I've described before, Ethereum has the best path forward for scaling. But anyway, read this thread from Blocknative to get a bit more context around this. But I just wanted to kind of like cover how I think about fees and how I think about block space and kind of like demand for it in the Ethereum ecosystem. So Hayden from Uniswap put out a little tweet today where he said, it's been a pretty good week for Uniswap. Yesterday, Uniswap V3 crossed $4 billion in TVL for the first time. And today, which I guess is like probably yesterday, like the 11th, and today being the 10th. Yesterday being the 10th. Today, Uniswap traded over $4 billion in 24-hour volume for the first time. And DEX protocol market share also at an all-time high of 70%. Now, I think that this chart is a little bit outdated because it shows DYDX volume as being basically non-existent, but I'm pretty sure that DYDX volume is for L1, not L2. I mean, I'm certain it's for L1 volume, not L2, and DYDX and L1 is basically non-existent now. So counting L2, I mean, DYDX would stack up really nicely here, but I mean, they're kind of like different, right? Because they're a perp exchange, they're a club, they're not like an AMM. So if you just compare AMMs here, compare like Uniswap to SushiSwap and Curve and other ones out there. Obviously, like Uniswap has more pairs than Curve, but just the dominance is incredible. I mean, Uniswap not only has the brand awareness, but it has like the integrations too. So you can see, exactly why they do so much volume. I mean, that's a crazy amount of volume. $4 billion over 24 hours. My prediction in 2020, at the start of 2020, was that Uniswap would do $1 billion in 24-hour volume for the first time in 2020, and I was called crazy back then because I made that prediction when Uniswap was only doing $5 to $10 million of 24-hour volume. But hey, we had DeFi summer. Ethereum basically crossed that that chasm there, and we got across to basically DeFi being ingrained into the network, and now we're just like breaking records, even though the fees are high as well. As I just explained, the reason why all this trading volume is happening is because there's profits to be made here. No one would be doing it if they were doing it at a loss, right? There's money to be made, profits to be made, so it makes a lot of sense from that perspective for sure. So Mohamed Mansour has open sourced a new Ethereum Node Crawler in alpha fashion. So this is great. So he's worked with Tim Byko, Marius here from the Geth team, and someone called Tax Me If You Can, which I don't know where this person works, but that's a pretty cool Twitter handle. And this is an open source crawler for looking at Ethereum full nodes. Now, it's in alpha. It is not going to represent the whole network. It is actually missing a lot of the network right now. I think that, okay, it's not loading. Hopefully it loads. But anyway, in the picture, you can see that they're reading about, I think, 488 nodes, but it's only reading from Linux. It's not reading from Windows or Mac OS yet, or any of the variations of that. Other websites show anywhere between 3,000 and 7,000 Ethereum full nodes. It's been traditionally very hard to get an accurate view of the network for a number of reasons, and there are a lot of nodes that actually aren't publicly visible, so you actually won't be able to scan them and include them in this sort of tool. But yeah, I think it's safe to say that there's anywhere from 3,000 to 7,000 full nodes for Ethereum, all spread out all around the world. They're obviously not just like concentrated in one place. Most of them are in US and Europe, which makes sense. I mean, that's where a lot of the users are situated. There are some throughout Asia, and there's a small kind of like set in Australia. But yeah, for the most part, it's US and Europe. But I think that we need more full nodes. And this is what statelessness is going to help with. I would love to see tens of thousands of Ethereum full nodes. It's not that hard to run one, but the problem is that there's not really an incentive to run one outside of wanting to keep the network healthy, or if you're like a provider that provides full node infrastructure or node infrastructure like Infura or Alchemy or something like that. There's really no incentive because you as a full node, you're not mining anything, right? Like you're not a miner, you're not participating in consensus, you're not being rewarded ETH. You're basically taking on a cost. Like by running a node, you're taking on a cost of having to keep your PC on all the time to run that full node. It's a marginal cost, not that big of a deal, but still, it's a cost, and you get nothing in return. So really, it's an altruistic endeavor. But with stateless clients, it's just going to become much easier to run a full node. And by default, with light clients, every device is going to be a full node, from my understanding, or at least like a node in the network that can actually service requests and things like that. So yeah, I'm looking forward to seeing more kind of like work be done on this. I hope that we can get like a very accurate view of the network. I hope that we can kind of like come across basically everything and not have to rely on kind of like guessing or guesswork, so to speak. And I hope this site like works for you guys when you click on it. I mean, I see some filters here applied. Maybe if I remove these filters, let's see what happens. I'll remove them all and see if anything happens. I doubt it. I think that because this is an alpha version, it's going to break, unfortunately, sometimes. But we'll see. No data available. Hopefully, it's not broken for you guys when you use it. It'll be linked in the YouTube description, of course. So finally here, we have an update from Ultrasound Money. There's a few updates here. They have historical USD values now on their website. The gauges are dynamic with timeframes, and now the leaderboard for the burns goes to 100. So you can see here that these gauges can be measured in US dollars now. You can change your time frame and measure everything in USD, basically, instead of having to measure in just ETH, which is really cool. So you can quickly calculate how much ETH has been burned by any given app on any given day in any given time frame, which I think is really cool. This is my favorite website. As you guys know, I run it right here next to me on my little iPad mini here, watching the ETH burn. We're almost at 1 million ETH. It's like burned. It's 860,000 at time of recording. So 1 million, we should be celebrating relatively soon. I think maybe in the next couple of weeks, 2-3 weeks, maybe, if I'm doing my math correctly in my head. Maybe even before that. I'm not sure. I haven't done the math in my head just yet. But yeah, cool to see that, and cool to see this update from Ultrasound Money. And I think on that note, that's going to be it for today. But just a quick reminder before I wrap it up, there's an AMA happening in the Discord channel tomorrow, so definitely go check that out. There's a link to it in the calendar channel in the Daily Gwei Discord channel that you can just like tick, do the tick emoji on it, and it'll automatically kind of RSVP you to it, and then it'll send you a reminder once the AMA starts. It is at the normal time of 11 p.m. Australian Eastern Daylight Time. I'm not sure what that is in your kind of like time zones. I think it's early US and afternoon Europe. But yeah, so I hope to see you all there. If not, you can ask your question in the AMA series channel on the Discord channel, and I'll answer that. And of course, it'll be recorded and uploaded to YouTube later. But on that note, that's going to be it for today. So thank you everyone for listening and watching. Be sure to subscribe to the channel if you haven't yet. Give the video a thumbs up, subscribe to the newsletter, join the Discord channel, and I'll catch you all next week. Thanks everyone.